from what I understand, also has relates information over to your personal credit, right? I think if you're starting a business, you're a person is going to relate it to the business side of things too. Okay? So I'm gonna turn it over to Steve, because I know Steve wants to talk about a few things, and then I'm gonna kind of go back and forth, and then I'll get your questions in too.
All right, awesome. Well, good morning, everyone. Basically, what I'm going to do is just going to give you a quick overview of the process, and then Andy's going to go into the details of it. So, I mean, just like on the slide that it says, what acquired business credit is separate the personal business finances, right? So a lot of us here start off with credit cards, which is in our names, which will affect you with funding down the line, because it's under your name, it's just going to wrap up your DTI numbers, which affects your fundability. So the best way to do is kind of separate those two. So we're going to talk about basically ways of how to move your out of personal into business, really where you want to be. When you build a credit history, it helps you qualify for one loan at competitive rates. So if your business has some age on there, it'll help you get those better.
Institute Finance, your credit solutions, providing pay debt solutions. Actually started off as a credit restoration company, not a debt solution company. So we do both sides of the spectrum. I represent Chase, City, and TD Bank on charge-off debts on one side of the firm. So we collect for those banks. So for example, let's say you have a credit card debt, goes with the charge-off, 180 days is not paid. Chase will set up that third-party collection agency. You have 3 months with that third-party collection agency to resolve it with them. If it's not resolved, it goes back to Chase, then it comes to my firm. From there, we give you 30 days to resolve it. If it's not resolved, we put public record, we get a default judgment against you. So we see if you have a house, who you're working for, which is ADP stuff, we talked about that. And or if you have a bank account. Whichever comes first, we put a lien against it. Most of the time we put a lien against your property because we come first position. If you buy or sell, our debt gets paid first. Have you seen that before? That's how it works, right? On the other side of it, on the spectrum, Y2K credit is where we help clients with charge-off debts, negative accounts on the credit report. As a debt buyer, we settle your debt to, let's say you have $5,000 in a credit card debt, right? And you call us, hey, I'm in credit card debts, whatever, I need to fix my credit. We'll take that $5,000 down to $1,500, $1,600. That's your responsibility towards the pay. Once you pay that portion of it, we own the rights to do the final reporting. That's how the negative comes off your credit report within 5 months, but we're a collection agency, opposed to the standard for 7 years. Now, how this whole thing got started, I used to work for TransUnion for credit bureaus. Now, if you guys ever looked at the credit report, you've seen a collection agency portfolio recovery. You ever seen that? PRA portfolio? That's the software I wrote for that. And I resigned from TransUnion in 2006. Took the blueprint and we coded it to what we do now. So that's how this whole thing got started. So when I say I have first-hand knowledge, or I'm a consumer credit expert, is because I worked for TransUnion on the back end. So that's how this whole thing got started. All right, let's go to your question.
We're good?
Good.
That's a lot, bro. I'm saying you got good.
It's a lot more, though.
All right, here's the first question. How does personal credit impact the ability to securing finance for small businesses, and what steps can owners take to separate the two over time?
That's like 3 questions in one, but let's
It is.
So here's the thing. Especially after COVID, every single bank is looking at your personal credit before they extend business credit. Right? They're not going to report it on your credit report, but if you go default, that negative is going to get reported. So if you have personal credit, personal issues on your credit report, that has to be fixed, because businesses are going to look at that. Especially if you go like the Chase Inc. When you apply for the application, you just don't put your EIN, you have to put your social. They do a soft quote. So to answer your first question, is you have to have good credit, good personal credit. You can't have collections, you can't have charge-offs, and your score needs to be at 720. That's the threshold most banks require to give you business credit. So if you have collections on there, and you have to look at your credit report. A lot of people are looking at your report like Credit Karma, Credit Sesame. Nothing is free in this country. You can't look at a free site and say, this is my credit report. You have to get a paid subscription to like Experian, Identity IQ, or Score Navigator, which is our company. So either one of those companies, get a subscription. You see all 3, and you have to see all 3 bureaus, not one. Everyone's like, oh, I see Experian. No, there's 3 other bureaus. Not every single bank pulls from all 3 bureaus. It's separated. So Experian will pull from Chase. Goldman Sachs pulls from TransUnion. So you have to see what's on all 3 reports, and all 3 reports have to have the same data across the board, give or take 5 points. When I say 5 points, your score and your credit card utilization. What's the second part of your question?
Second part of the question
Oh, how does
is,
that affect you getting business credit?
yeah, how can you separate the two over time so that you're able to
Well,
acquire?
here's the thing. A lot of people that are opening small businesses now damage their personal credit. They don't want to fix it. So they're like, oh, let me open a business, get business credit, and I'm going to start moving from there. You can't do that. You have to separate everything, right? Especially when you're trying to get funding for your business. You can't co-mingle your business and your personal together. So personal credit card should be personal, pay those separately. Open your business, get a payroll, pay yourself, and then pay your credit card.
Get it with ADP,
But
right here. Get your payroll with ADP.
Yeah.
ADP.
But
Payroll.
it has to be separate all the way down the line. You can't co-mingle it. You're never gonna, if you co-mingle, your debt to income ratio on your personal is gonna affect your getting business credit. It's two separate identities. That's why your business has an EIN, you have a social. Okay, not the same. With that question, we can go much more deeper into it. Maybe after the event, we can talk more about that stuff.
Cool. What are key factors lenders look at when evaluating small business credit worthiness? And the second part is, how can owners strengthen those areas?
All right, so here's the thing. You guys use the word funding here a lot. And this word right here, you gotta be careful. Funding, everyone's using it in the wrong context. When you open a business, you don't get business credit. You don't get funding from a bank. You get credit cards. That's what you're qualified for, right? So when you open your business, you have to have all three bureaus, Equifax, Experian, Dun & Bradstreet, those three are the credit bureaus, reading the same data across the board for your business credit. Yeah, that's the identity. Equivalent to Experian, Equifax, and TransUnion, your personal. So that portfolio has to be built first. Paydex scores to be about 80, 85. That's a comfortable number you want to be at. Now, when you want funding from a bank, you'll get credit cards in the first year. No doubt about that. You go to Chase Inc. Every business, American Express, you can get out of your business as long as you have an 80 score and a decent profile. But when you want funding, when we say funding, we're talking about loans from a bank. That's what funding is. And everyone's putting this word funding together, but it's not the same thing. Funding comes from a bank. In order to get funding from a bank, you need to have 12 months of P&L, profit and loss statement, and a tax return. But you can't run your business at a loss and then go into the bank and say, hey, can I get a $100,000 line of credit? How are you going to pay that? You're running at a loss. The problem is people don't want to pay taxes. So you cannot want to pay tax, not want to pay tax, and still want bank money at the same time. It doesn't work like that, right? So you got to decide which one you want. But to build a strong credit portfolio, could be credit cards, paid monthly every month on time. That's it. So it's very simple, but it has to be done the right way from the inception. When I say that, build the portfolio the right way. You can't start 6 months into the business that, oh shoot, I need business credit. Or I gotta add this line of net 30 on my account to get my score up. Like, it has to be done.
Just so you're aware, companies like myself, like ADP, when it comes to payroll, the simple question of, can I pay my employees direct deposit? If your business credit score is low, we will say no to that. So this even affects the ability to pay your employees. All right. Next question for you.
Also, you see the problem why banks are more tough with business credit, because you could bankrupt your company and just walk away, and that bank's at a loss. Right? Now, when you PG your debt, that's where banks got smarter. They made you PG the debt, even though it doesn't report to your credit report. If you default on a business, it rolls over to your personal credit now. Now, if you file bankruptcy on a business credit, you got to file bankruptcy on your personal credit to get the hell out of it. That's why if you separate it after you do your first month of P&L, let your EIN stand alone by itself. Not you and the EIN. You're not married.
That's definitely the goal. What you want to do is you want to move from personal guaranteeing the debt to basically having your corporate credit stand on its own. That's why you want that good business credit score. So it's important that over time, if you can shift that credit from your personal to your business. But one, you want to talk to a tax professional to do that, because there can be tax implications to that, and you want to make sure that if you're going to do that, you want to make sure that the debt that you're moving from your personal is business. So that way it has a reason, the business has a reason for acquiring that debt.
Correct.
Okay?
And one thing about business credit is beautiful, man. If you understand how to use it, you get way more money in business credit than personal credit. I live on business credit. I live on bank's credit all day. I barely use my money. But everything is set up properly with P&L and paying taxes. But I'm paying tax, I'm not running at a loss.
All right. So let's say you got your credit in order, your personal and stuff. What role does business credit reports specifically, like the Dun & Bradstreet, which I want you to focus on? Because a lot of you business owners may not know this, But even companies like myself with ADP, with all our products, we report directly into Dun and Bradstreet, all right? With, like those from Dun and Bradstreet, or your Dun's number, or Experian Plane accessing financing, and how can owners ensure, more specifically, how can they ensure those reports are accurate?
So, perfect. So you know how I just said, if you want to see your personal credit report, don't use a free set like Credit Karma or Credit Sesame, use like Identity IQ, Score Navigator, Experian, all 3 bureaus. In business credit is something called NAV. NAV is like a credit reporting bureau for all 3 bureaus. You want to have an account with NAV and check it every month. And from NAV, you can send updates to all 3 bureaus if something is incorrect. Simple as that.
What's that site? Is this site?
NAV, but NAV can also act as a trade line for you
Yes,
as well, help adding to your business.
Where would they access that? Is it like a site? I know you're saying NAV.
NAV.com.
NAV.com.
So there's a free version and there's a paid version. When you're building your business credit for the first 3-4 months, you don't need the paid version. Just get the free one. But once you start putting trade lines like U lines and net 30s on your credit report to get your score up, to get credit cards, you do the paid version, because $30 a month. Most startup companies, or most people who start a business, will title finance, right?
You do quarterly.
Oh, I don't know what the cost is now, but after you get the foundation of your credit bureau built first, when I say your foundation, it means your address is on all 3 bureaus, your EIN is on all 3 bureaus, your contact information, your Google verified. That's what the bureaus are looking for. And you can't have it at your home address. Like your home address cannot be your business address. So you have to get like maybe like a Regis office space, one of those rental thingamajiggies.
Yeah, so when you're setting up your company, you want to go back and look at it, because Duns is going to ding you if the information is not correct. You know, so if you have street instead of suite, things like that will kind of mess you up. You want to make sure all that's set up. You also want to make sure that you don't list as a virtual office. You want an office. You know, so when he says Google verified, these are the things that they're looking for to help boost your numbers. So even just basically just from the setup, you want to make sure that when you establish a company, you're using one that's not gonna be a red flag. You want something that's more credit generous, you know.
Or business likely, right?
Yeah.
How do you go back to that? A lot of us started from home. How do you go back to it?
So it's a long process because the 3 bureaus of business don't speak to each other. That's why NAV comes into play. NAV is like your...
That's self-reporting, right?
Correct.
You'll go self-report all your Duns and Bradstreet info, right?
So in NAV, you can just go to each bureau, update it, and NAV will send it, push a notification to all the bureaus. Just like the credit bureaus, like Fax and Screen Transient don't speak each other language. We don't speak at all. The only thing we speak together on is fraud stuff. That's the only time we would ever speak to a credit bureau. Other than that, like your regular credit cards, don't speak to each other. You have to manually do everything to each bureau.
I'm finding that out now looking for funding is that most of the stuff we've done has not reported.
Correct.
And we now have to
We
self-report.
can fix it for you, but I mean, that's...
Here's a question for you. I'm in the initial steps of setting up a company, right? Do things like, not, because you spoke about address, right, so location is one, right, because those are verified. But 2, things industry specific, like the NAICS number and things that are also being reported, which ones are safer bets or better ways of reporting or setting up the company so that later down the line when I'm building my business credit, it becomes easier?
Well, here's the thing. That's a good question, actually.
Thank you.
I said it earlier. When you build it, that's why I said, build it the right way, right off the rip. From the get-go, don't start halfway and go back 3 months later trying to fix something. It's way more harder to do it that way. So you have to get an account for Equifax business, Experian business, Dun & Bradstreet business. Get that first when you set up your account. And once you're in those accounts, you can just put all the data in there to answer your question. Oh, and there's a requirement field. It all has an asterisk. So those are the pertinent information that they need. But do it that way from the get-go. Don't do it halfway and then try to start over.
Let's say you're already started and you're in an industry that they consider high risk, right? Well, yes, you want to try to clean that up so that that business can get some credit, but it will get more funding if it was in something that was less high risk. So just start another company, consulting. Let's say it's Johnny on the go, and let's say Johnny on the go falls under a high risk. You can just put, start a company where it's going to be under consulting or marketing, where it's less risky. And that way, as you build that up, you're building that business credit up for your main business. So that's another way.
Is that legal to fund back into your other LLC? Say with our situation. I go and open a marketing company, it's easier to build credit, it's easier to get funding. Am I allowed to do that? That's
Technically, no, it's, the only thing that makes it hard to get funding is anything with a financial name to it. That's the part that's very tricky with viewers, right, and the banks. The things that's financing, credit repair, like I'm not a credit repair company, that's not my company, I don't classify as that, I'm not classify as that, because that whole industry is a fraud, we all know that, right? So anything with those names, certain names, it's like red flag. But no, it's not like funding back, if that's, like you said, like taking money from one account, one company to another company?
yeah, so like you said, if I start something less risky, am I
So-
okay to pay this original mother company?
Right.
How
No,
does
so
that
you,
work?
you could, like, I have 7 companies, but I have a holding company. I have a ton of real estate. Every real estate property I have is in a separate company by itself. The reason why is that I need money to buy more properties. So instead of me using my HELOC or refi, I already have a 2.5% rate, I'm not gonna refi that.
Yeah.
I take a line of credit under the business of that LLC and go buy something else, while the tenant is paying the mortgage and that loan back, because the profit margin in each real estate is so widespread.
Yeah.
But then I take money, put it back into a holding company, like I have a yacht. My holding company rents it from my main company, but it's me who wants revenue, really. But it's all transactional, your accountant can set that up for your property. It's all a business expense, right? As long as the paper trail shows. And one thing I tell you guys with business startup, don't try to cut corners. You're just gonna squeeze it. Don't cut corners. If you're not gonna do it like run your business legitimately, don't expose yourself to IRS, get an EIN and all that stuff. Because every single year you gotta file a profit or loss return, and if you don't, the penalties now is very, very clear. There's probably CPA here to go to about that. But if you're not gonna do it the right way, all the way, and you're responsible for it, don't do it. Because you get yourself in a lot of financial problems going down the road.
So let me ask you, we got a couple more questions, and I'm gonna open them to the floor. John Luke, I'm gonna open it to the floor after I ask these 2 questions, okay? Now that you're not allowed to, all right. Now that you're not allowed to. More specifically to the funding part of it, okay? You talked about risk areas, like the, financial segment or other things like that. What are some other risks, or things to avoid? So we got the address, let's say we've done taking care of those things, but I set it up the wrong way. I built some credit in my business. I'm 1.5 years, 2 years into it. But I need to open something else. Is it better to shut down one and try to transfer everything over, or?
Age.
No, yeah, you don't want
Age is important.
Yeah, you
So talk about age then.
So, obviously, just like your personal credit, the longer your credit card you have on your credit report, the higher your score is, the more credit limits you get on a personal credit card, right? Same thing with age, it shows that you're a stable company. So you're more easier to get funding from a bank. The startups are very tough to get funding. Like banks really don't want to do anything, at least like 2-3 years. 2 years. So age is very important if you want to get long-term funding. But here's the thing, when you start up a business, whatever you do, you can just, like you said, put it out like consultant to the end of it, so that you can add on to that, if you want to open another company down the road. It all aligns with each other.
Yeah, age is extremely important, so if you're thinking about starting a company, just go ahead and start it, because that age plays a lot. Even if you don't do anything with it, it's on the books, it's registered. The history of that over time is gonna get easier to get funding for that, so.
Oh, wait, by the way, on the topic of aging, right? And this goes for personal and business also. If you have a credit card that you're not using, do not call the bank and close it. Let the bank close it due to inactivity. You lose the points if you close it, the history you lose. That makes sense? Right? So leave it at a 0. Like I know a lot of you guys probably have Victoria's Secret, Community Bank, Bank of Missouri, those cards that are like 20-something% interest rate. You don't want that on your credit report to begin with. Because again, your business is determined on your personal to get a credit card, right? If you have a credit report, personal credit report with Synchrony Bank, Capital One, First Premier, Merrick Bank, Bank of Missouri, Community Bank, you're not on the same level as a Chase Sapphire credit card. Those banks are not on the same level. So when a bank wants to extend credit to you, banks are in competition with each other's business. Like if I was Chase and Trusco, Trusco gave you $10,000, I'm gonna give you $11,000. I want your business. But Trusco and First Premier is not going to say, like Trusco's here, First Premier's here. Like we're not going to see eye to eye. We're never going to extend credit. So you don't want those on your credit report to begin with. And if you have like good credit, you have prime credit cards like Sapphire, Amex, you don't need those cards anyway, right? Because Chase gives you what, $5, $5.7 you spend. Amex does the same thing. But the point where I was trying to go with that, don't close the card, zero it out, and let it just sit in your credit report, and in 6 months it'll close with inactivity. If you close it, you lose the points. And don't close a card with a balance on it. You lose 40 points for that. On your personal, which can affect your business, and you get a business credit card. If your score drops, you have a problem.
Go ahead, Steve.
Now, just, if you could just go into that, like, cleaning up your credit, inquiries, especially if you're trying to remove inquiries and you have an open trade line, you definitely don't wanna do that, you know, so.
Yeah, if you do that, first off, I'll touch on that real quick. You're only allowed to have 6 increases in a 12-month period. Anything more than that is considered abuse of credit in the credit bureaus. All right, so 24 months, the increase falls off. So if you do 6 this year, 6 next year, by the third year come around, the first 6 is falling off. But anything more than 6 increases in a 12-month period is considered abuse of credit. So you get denied from credit cards or future funding in your personal. But like you said, if you have an account open, let's say you have an auto loan for 4, but when you went to get 4, they ran your credit 5 times to shop you around for a raise. Because if you don't have a 700 credit score going into a dealership, you're not gonna get in-house financing. And you always want to get in-house financing because that's where you get tier 1, tier 2, tier 3 credit. Not rates, right? 1%, 2%, whatever it is. Once they start shopping you outside the Capital One, Santander, or Ally, first of all, you're gonna be upside down with your loan. But I think you finish paying that off, you pay for 2 cars. But then you can't remove those increases, but once the loan reports their credit report, and the only way to report is go file it as fraud, then the bank's gonna say, hey, you're saying it's fraud. You can close the account. And that same thing goes to the credit card as well.
All right, I'm gonna ask this last question, then we'll go to the floor. What should small business owners know about the differences between secured and unsecured business credit options when building their credit?
Well, I mean, the secure part is it's loans that you get if you have collateral attached to it, right? You default, they're gonna have your collateral, secure your credit cards. You need both regardless, but you're always gonna get credit cards first when you get loans, because you're building up your profit and loss when you're attached there for the first year. So you're always gonna get credit cards to start off with. It's what kind of credit cards you get and what limits you get that's sufficient to run your business. So, but you need both, regardless.
So a cool trick you guys can do when you're trying to just build up credit, you use it secured and the bank's not really lending you because you don't have any age, you know, you can open up a CD at a bank and then just take a secured loan against that using the CD as collateral. So that's kind of a way for you to kind of go around it. Everything's legal, it's up front, the bank has your money already, so they're more apt to go ahead and just lend you that with the CD as collateral. So that's a way for you guys to help establish, you know, one getting a loan and establishing paying it back as well. So.
I'll touch on that real quick. This goes to first one. If you have bad credit, you cannot add positive on top of negative. You have to take it to negatives first in order to build the credit back up. So I see a lot of people trying to add trade lines or let me add my uncle's credit card, build my credit up. It doesn't work. Your score's just gonna read. Yeah, exactly. It's not gonna work. What happens, once that trade line hits your credit report in 30 days, when everything else updates again, showing that you have unpaid balance, your score will right back down. You cannot add positive on top of negative. And you can don't say, I'm gonna get a secure loan or a credit card, thinking you can build your credit. It's not gonna work. You have to fix the negatives first.
All right, I want to open it up to the floor. Specific questions.
I think Jane, you had a question.
I was just thinking that, I was just gonna ask, for people that have like mobile businesses or online businesses, are the credit reporting agencies ever going to understand that? And because of the verification of location?
Well, you have to have a house, a hub where you're getting your mails at, right?
Right.
So that's where we're talking about getting like an office space. And the reason why I said Regis, because $199 a month, you get a mail office, an address, a box, a live person, a phone number. You can use that to classify. That's your
So your
corporate
answer
office.
is they're never gonna catch up?
No, everyone's using Regis now. It's the most affordable thing, especially online or mobile.
Or 317 virtual services.
Yeah.
317 virtual
Oh, that's
services.
who that is. That's you?
Yeah.
Yeah.
No, that's not me. That's one of the chamber members. She's great. Alexis Daly. 317 virtual services.
Thank you.
Anybody else?
How do you get out of these introductory rates? How do you get out of these introductory rates with this funding?
Shoot, you gotta get them low to run refi and all that.
Say again?
Get a loan for refi, another loan, like you have credit cards with high rates, you have loans with high rates. Which one?
We just have our fleet, basically, and
When you say fleet, like cars?
Say again?
When you say fleet, we mean cars?
we do mobile, repair service.
Okay.
We have work truck.
Okay.
But I'm trying to get funding to kind of just back up payroll. 'Cause
Right.
It's not that we're too overextended. We wanna play safe. We don't wanna go 2 weeks with no work, because it's not guaranteed. Now, we're pushing into marketing, but we still want funding to be safe, and I'm stuck in this introductory rate.
But what do you say introductory rate, how do you?
30,000, 10 months.
Oh, that's what, like, cash advance, that's what it's called.
Basically, that's what it feels
Cash
like.
advance, that's what it is.
No, that's-
They're
that's-
debiting out of your account every 2 weeks or something like that?
See,
They debit out of your account every 2 weeks to pay the loan back?
every week.
Oh, yeah, it's cash advance.
Yeah.
Shoot, that's such a tricky question, but, I would get a loan from like SoFi. Switch, SoFi is like the easiest loan, but as long as it scores at a 710, you'll get the loan. And consolidate everything to get out of it and just pay that back, pay that one loan back. That's the best route to pay.
Consolidation is the best way to work.
Because how long you been in business?
Gonna hit 2 years this month.
You don't have like business credit set up properly?
We do, we have sapphires.
But do you have a profit or loss, or are you running a profit or are you running at a loss?
Well, we're running a profit.
Yeah, the two-year age mark on there, you know, with the profit and loss on there, you can actually.
Get a line of
You're hitting there to.
We're waiting for Chase, we're with Chase, like I said, we got the sapphires, we got approved, it's great, we gotta wait for that maturity.
No, I would just talk to Trusco. And do a line
We'll
of
take it
credit.
offline, we'll do it, follow up with Steve then afterwards, because I wanna get the Jesus, yeah, I wanna get the Jesus, right here, alright, go ahead, homie.
So if you, like I have credit cards, I have, Amex, Chase, but.
Personal, right? You're talking about personal?
No, for business. So, but when I applied for them, they obviously asked for my personal
Correct.
information, and we still got approval for them. So my question is, when you do, I've had them for years now, are they still technically attached to me? And if they are, how do you pull those apart?
So-
Some will ask for your social, because they wanna verify that they're dealing with a real person, when it's not connected to.
Unless you
it's
go
not
default.
guaranteed, yeah.
Unless you default, then it gets reported.
Yeah.
Okay, so if I'm in good standing,
They
I
would
should
have
have.
to report it, correct.
Okay.
Yeah.
Good.
But if you go default, like you start missing payments, and then it goes to charge-off status, it's gonna affect your personal credit. You're gonna report it.
Yeah.
That was it for me.
Thank you. I'm gonna end the questions there. All right, I'm gonna end the panel here too. So thank you, Andy. Thank you. See, there's gonna be here afterwards too. So I don't know how long